The cracks were forming with gold, and it sort of seems that sort of like, although Asia just seems to go on a bit of a buying spree for the metal and that, the UK and also US sessions and that seem to really sort of step in and say, hey, look, that's about enough for us for now. It's 9:28 on Friday, 14th of August, and I'll start off with gold, just on that note there, because we did finally actually get a sort of, I say finally, but it's only been a couple of sessions, but a break to the downside here. And if you saw, I did a little bit intermittently, or do a sort of bit of an update through European sessions and that as well, just to sort of give a bit of a breakdown, as sort of like a recap follow up of what we saw in Asia, and then sort of how we can sort of play it through those through the rest of the night, basically for us in Melbourne. But from what we saw here, I think it was around this sort of point here yesterday, I was saying, hey, look, you know what, if we come up to the top side over here, bang, this is where we're looking for potential sells. If we got back up here, that'd be your kind of last line, or my last line of defense, to sort of say, hey, look, maybe this was just going to continue as a bit of a range. But, you know, look, it has sort of all played as it should have. We've seen a couple of attempts to hold this level here. This is where the buyers were previously. It was obviously previous resistance as well. So this is going to be an important part for us here through Asia, I would say, today, because what we're sort of seeing here, with so many zones, it's a bit hard. Like this grey zone is, I think, from, I mean, you can't see it so much on this one, can you? Maybe it was a daily. Yeah, so this is the daily body fills kind of thing. So look, it is a bit of a zone in that it is touching into here. I don't think it has as much relevance as some of these more recent kind of levels. Hence, this is where I was sort of picturing where the buyers are. But with these two things, these two lines are the ones that I put in yesterday, 43.48 and 43.17. You can see exactly they've sort of come in here. So the idea with these ones are that obviously this is a top side of resistance of this like little zone through here. So, you know, you get people that were maybe sort of short through this area. Okay, they'll give it another shot to move up here. But more or less, you're probably still targeting this 43.17. Certainly, if you do get down here, this is your important one. This is your make or break kind of sort of level for it all. But what we are sort of seeing at the moment, obviously, like we had the sort of we had the fake out yesterday, which was the early indicator. The break through the sort of rising support of this sort of ascending triangle, back test to the break point. That's good. Look, it's doing everything as it technically should be doing. One thing though is that sort of obviously through Asia, we saw it yesterday. Look, that was a little bit different because it was sort of like it was a really fast move up through Asia. So where were we? This point here, that was there serving a purpose, obviously, to sort of push and hit those stops at the top side there. So again, look, this is why I think it's going to be important today, because what you want to sort of see are they're going to sort of turn this area, which was resistance, 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 support, 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 support. Are they going to turn it back into a resistance? That's the key. If we see this thing sort of fly back up through here, like we have seen in Asia, we've seen the buying in Asia, and if they push it back up here and hold in here, well, then, you know, it's really kind of just like, although it's a deeper correction from here, it could sort of just still sort of keep this thing very elevated. It's probably not my sort of base case. I mean, look, it's hard to sort of tell when you get that kind of buying like this. You kind of it can make you look like you don't have a clue what you're doing with your technicals, to be honest. But if that's one sort of consideration of it. If you move up here, you look for that sort of 43.80, 84, this kind of area here, where it was that last area of resistance to sort of push it back down to its most recent sort of like, I guess, overnight lows. Down into, where we get to, about 43 or so. So look, so over $100 off the highs now. So okay, that's one consideration. If it does pop up into here, let's whack this down here just to sort of update us where we're at. If it does come up here, 38%, it's that wick low from CPI. It is obviously the this little sort of resistance area. That's where you'd probably want to see it hold. If you get above sort of 43.90s, then it's really just, okay, maybe this is a fake out, and then we go on with more or less just range, and, you know, you work with the levels inside there. That's not the base case. What I'm sort of feeling is that potentially what we might see is where we've had it as sellers were moving in here. Sellers were moving in here. They've tried to hold it. They've tried to hold it. They've tried to hold it. And again. that now this actually becomes the resistance again. So this is why it'll be important, sort of, I would say early Asia, excuse me, and this little zone here will be important, because if we see what they've been doing in Asia the last couple of sessions, which is just in crazy sort of buying spree, well, there's no reason it can't just shoot back up into here. This is just like, basically, Asia shoots it up, US, UK sessions shoot it down, Asia goes, great, I've got a discount. I mean, they were buying it like crazy from 4,400. Well, here you go, you've got it from 43.30, 43.50. That's a nice discount for it. That's the idea with that there. You've got the break, you've got the back. I feel it's just done everything that it should be doing to sort of maybe come down a little bit lower and really sort of test these buys down over here. Now, I did have it on a different, this is the thing of having different charts. We had a bit of a flag, I think, that was sort of forming through here. Was it this one here? It's a problem with sort of bouncing back between platforms, but it was something to like this sort of effect, I think I had it. So, which is kind of like a little bit of a flag, which obviously needed to come down underneath the lows here to sort of make that confirmation. And then this gives us a measured move pretty much right down into this buy zone over here. So should we get a break of this morning's lows, or overnight's lows, whichever you want to call it, what time was it? It was about 5 o'clock this morning. Should we break these lows down over here, another leg down, complete this bear flag measured move, retest this area where we've seen buyers previously, whoops, not that, just this one, and expect a bit of a bounce from there and sort of look for longs there. I feel that's probably more the case than that, because again, with these sort of moves, like this move yesterday where Asia just bought up really strong, really fast, it was there for a purpose. It was there to hit the stops. It was there to drag in a whole bunch of people saying, hey, moon, 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 you know what I mean? Rocket emojis, those kind of people, they're going to be sitting here going, hey, you know what? I saw Asia yesterday and they're buying like crazy. Asia's been buying like crazy every week. That creates a pain trade, because all these people see this nice little move up here. Look at this nice little fat candle close at the top here. Well, this is a little bit, albeit a little bit slower here, the old frog stomp sort of thing. Wick, close right on the top of the candle. That's generally can be a little bit of a trap of a thing. We'll see in the next sort of half hour or something, no doubt. And, maybe it'll just fly all the way back up in here. But my feeling is that sort of, particularly if you go underneath sort of 43.40, you've got another leg down to sort of 43.17s, and then you've got a strong support down here. Because I think even if we jump on the daily, that's probably a bit of a support level, isn't it? It's those low wicks down there. So, again, this could just be wick up, flip, wick down to these wicks over here. Now, if it got under here, that's not the base case, then, you really, if this thing sort of gets onto it, this is an engulfing. On the daily, that's an bearish engulfing candle, which generally leads higher probability to, obviously, continuation. You're overbought. It's been overbought for a while. Yeah, it's been overbought for a while. But, when you line these things up across the different time frames and that, it gives the argument that you could probably see a little bit of cooling. We're still not even at the 23%. Wait, is that the fib? Oh, no, let's update that. There you go. Bang. So it is it's bounced at the 23 fib. So, you know what I mean? As I said, even back down to 42.85 still gives you the 38% fib, which is still very much bullish continuation. But when you look at it like this, look, if this thing gets back on, as I said, back up into this range, and maybe we could hold this sort of consolidation through this area here. But I think sort of intra-session, definitely if you can take out those lows under 40s, you're going to see a buying effort from this level down here around this sort of, call it 43.20, but 43.17, that kind of area around there, to sort of see if they want to really sort of hold this thing on for a little bit more now. Now, just a quick couple of things just with gold as well. We did have PPI out last night, and it actually came in weaker than expected. And the price action was a bit telling around this kind of thing, because as you can see, expectations were pushing up. I suppose we had revisions up, didn't we? So it was revised up. So revised up to 2%, still came in weaker than expected supposedly pricing for 3. And then is this revised? That's revised up there as well. Maybe the revisions something that sort of weighed into it a little bit. We had unemployment claims, as I said, with these things around that sort of 200, 210, even up to 220. That's still a non-issue kind of sort of thing. But the price action around that data as it came out was kind of odd. And I think this was a little bit telling because, where was the data? This was the data here. And it kind of, let's get on the low time frame so you can actually see. This is where the data came out. And as you can see, it's a doji, boom, 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 moving up and around like this. This little move here, a wick, top of a trend, and in this little trend it is here, top of a trend, close right on the thing. Those two candles there is what I call the frog stomp. It's just my name for it. I don't know, whatever. But it is a good sort of thing that generally has a pretty good sort of play out rate. And as you can see now, obviously with the hindsight of a couple of hours later, we can see that it played out quite well. Look, they tried to sort of hold this very much. I mean, look at this, a $30 bounce or so, but it's still drifting down and down and down and down. So we'll see how we go. I'd say sort of maybe if you get above sort of 70s and that, really above 85, then, maybe you sort of dance on with that, range above. But I think that sort of, it looks like it probably wants to at least come down and test these people down here. But certainly if you get down here, this would be the buy option or short closure option. And then you can sort of see what the market wants to do with that. That becomes your next sort of point where you want to see second efforts going through, that kind of sort of stuff with it all. But I think for now and that, it's doing what it needs to do. We just need to see, do they turn this zone that it's in right now into a resistance, which it was back over here. It then became support. Do the sellers go, hey, you know what, that's enough for us, and then we push it back down? I think that's a sort of bit of a key measure. Let's drag this across here as well, because we might need this at some stage. Make it a different color. Orange one. As you can see, we're coming up almost against that sort of resistance there. So as I said, I think a break through this area here, you break through this sort of, like the sellers are applying pressure down here. You just got to see, do they hold this zone? If you break through here, then okay, you pop back up. You hold this area, you're targeting the lows, break of the lows, you're targeting 43.20. Plus minus a couple of bucks or so. But that's probably the direction that I sort of see this thing happening. Just particularly after that stop run yesterday and the follow through. That's the kind of stuff you want to see, engulfing on the daily as well. All right. Just quickly on this as well. I know I've sort of been going on, rabbiting on for gold for a little bit here, but the yields yesterday got absolutely smashed. So I put a post on X at the time because these are the kind of things you got to sort of be paying attention to. And this is why having, screen real estate is very important. Like I got 249 inches and that. So, I got a lot of things that I could see at the same time in that. But, the yields were getting absolutely hammered after that data last night. So through this period here, this is on the 2-year, but we saw the same thing on the 10-year as well. Absolutely crunched. So I had this drawn up like this and I was like, okay, maybe it'll hold this area here. Nah, bang, it went through. Actually, it was up just like this. I was like, oh, look, you know what, maybe it's gone through a little bit. No, always trust the first line because I did this and then confirmed when it actually kept on going down. Anyway, the point is that, these were getting absolutely hammered last night and gold wasn't responding. And this is the point of the correlations with these sort of things and that. Like, yields will move gold, gold won't move yields. And when you see yields moving down and gold not moving up, you know something's up. Because that should be a big driver. We had weak PPI data and the yields should have been sort of really, the yields sort of coming off. Okay, that's fine. We saw that because, if you play that out, it's like, well, weaker sort of producer price index, stagnant CPI, weaker jobs. Well, it kind of takes the sort of the drive for the cut off the table a little bit. I mean, we're looking at, just having a look on another screen now, 40% against 60%, basically, sort of idea of a cut in September. So is that moved? It's still moving down. Yesterday it was 48. Now it's 40. The day before is 54. Like, you know what I mean? So anyway, the yields are moving as they should be, but gold wasn't moving. Gold wasn't reacting. And I think that's kind of where you need to sometimes be on top of these things to sort of be like, okay, well, there's a delayed reaction here. And if they're not doing that, what happens when yields push up? Well, yields did push up after the sell down here. They're not sort of breaking out, but they did push up off the lows. They already weren't buying gold, and then yields push up. Well, that's the sort of elastic that's just going to go snap, and then bang, we saw gold push right down for another leg down a little bit lower. So look, it'll be important to sort of see. We got a bit of a negative divergence. This is on the 2 hour here. See what happens with this here, but that's a bit of a negative divergence. So there's a good chance that we do see yields recover a little bit more here potentially. And if they do, that's going to be the thing that's going to sort of drive gold down a little bit lower there as well. This is the 10-year on a 2 hour. All right, let's flick along because that's 55 minutes just on gold there. Have a look at the dollar. Now, the dollar's still really in its range. It is obviously putting in higher lows each time. So we're seeing sort of like, coming up and up and up through here. Oh, drag this up here a little bit. We are seeing the RSI support that with the high lows as well. Now, last couple of days we had CPI. Initial reaction, as it should, sold off. Market said, don't care, buy it up. Tested the highs over here yesterday. This is range resistance. This is still the area. Need to get above to get that breakout. Now, we had PPI. Sold it down. Market said, I don't care. Higher low. Bang. Pushing up through here. So it is still pushing the pressure up towards that breakout point. Turn this off here. Still pushing up the pressure to this breakout point here. So I think sort of like, look, realistically, if you do break through this, it's only 2 touches here, but, really you got to hold this sort of beige cream colored line through here. Look, there's lines all over the place. The blue one's the major rising support, high time frame kind of sort of thing. So you can disregard that a little bit. This one seems to have been chopped out a little bit. So if we actually update that pretty well to the highs, seems to somewhat be holding it here, but obviously it's down underneath. I'm not a big fan of this one necessarily here. Let's get rid of it then. Still the direction that we need through here is above here. And you don't have the data necessarily supporting it, i.e. weak CPI. Actually it was a weak CPI. It was just an underperforming CPI. But that kind of saved it probably because the market was more pricing for a weaker one and it didn't get it, so it held it up there. But, weaker PPI, yields down, these kind of things are where, the dollar shouldn't necessarily be catching a bid, but it is. So, if they sort of continue with that, it doesn't really matter. Bad data, we still keep buying it up. That does put the risk to a break to the top side here. But, again, you need to have the price prove it. Because, it's all very well. Look, we've had the hard sell down. We're doing the sideways bit here. If you break this, then I think that's your early indicator that definitely will come back and test the range supports. That's not the base case. But, there's not real. I just can't say. I mean, yields are down. Data's not real. Like, the jobs are a little bit wobbly. I say wobbly because it's only really one bad print. They're not really pricing hikes as much as they were. CPI's down a little bit. PPI's down. Like, all those sort of things. It doesn't really paint the picture of the dollar breaking out. And, well, I guess to a certain degree, the dollar isn't breaking out. But, they are still buying it up. So as long as you can continue this sort of pressure moving up through here, it does still give it the pressure to move and break. Look for a break to the top side here. Silver doing the same thing as gold, really. It's coming down, testing these levels down over here. Look, I think sort of silver, if it does come down here, we've got sort of a couple of areas that we'd be looking at. This level through here, and then obviously I would say, look, you could sort of, depends how sort of on it you want to be, but I would say anywhere between here and, maybe these sort of wick lows over here would be your sort of zone that you'd be looking for. On a breakdown through here. Alternatively, it sort of does the same thing as I said with gold. They go Asia buying spree and they push it up. But in terms of this, we could see that the buyers were here. They were trying to hold it. It got given up. Now they've become sellers. So that's the level it's got to get above. It's got to get back above sort of 65.50. What we're seeing here is hold it, You break through here, you come down, and then that obviously then we see if the sellers want to hold this level here. But as you can see, they've held this line a fair few times here. So that's certainly your significance there. So underneath 64.20, call it 64.20 or so. You can see the sort of like, this, 64.20, 64.20 in that, then you're looking to sort of come down sort of, 36, around 36, 63. I got the numbers wrong order. Down into the 63 area, down over here. And then again, I'd expect a fairly strong reaction should you get down to this level, down over here. Bang, like this, and then we see what happens from there. But I just don't think, these things are still, as I said, it's holding the 23%, which I'm almost sort of tempted to take off the charts because it's not really a pullback. 38's your pullback. This is really just this is just stalling. It's just sort of thinking, okay, what should we do from here? But, it's, as I said, it's more or less just in a range. It's not really, excuse me, it's not really a pullback. It's more just pause. This is a pullback and then reload. Up, down, up, down, up, down. But as you can see, sort of these are still, look, the shallower the correction, which is 23, still keeps it very, very big. But I just feel that, potentially we got some downside to come here as well. Cool. And then finally just oil. Oil, look, I covered this yesterday. I said, originally I was looking at this line through here, which was like a bit of a pennant or something like this. Was it? No, actually, no. Originally I was looking at that one. And we got the retest of the underside here, and then boof, got hammered down. Now, we had a couple of headlines out last night, which got this nice big push off what would be this sort of extra, this flag line that I sort of put in Europe last night. So, look, it played its part, and you got a bit of a confluence here. I don't like these kind of ones, because that's not, you can say that, but these sort of things here are just, it's not really a level. It's not real, because what you're picking is where were the sellers, where were the sellers, where were the buyers, where were the buyers. That's just a level there, but you could, in theory, pick any one of these sort of ones here. Anyway, point is, I drew this line through here. It's held more or less down the bottom. That's fine. I think more significant is the fact that it held at the 38. It held at the 38% retracement of this move off the lows, most recent lows, which keeps it in play. Needs to get obviously above 84.60, but sort of early indicator would probably be above 82.70. If you get above 82.70, well, you're looking at this level over here. Let's put a little alert on it, which is your sort of flag resistance. Flag resistance. A breakthrough there. Obviously, as I said, you're looking at sort of those 84s and then for potential sort of continuation. But, as I said, I think the headlines last night were more or less, the US is happy to sort of hold this blockade for as long as they can. So, again, it's a stupid way to trade, but it's just headline trades, basically. Does your bingo card come up? Because as I was saying yesterday, it's still in this sort of move here, constructively bullish. We're breaking through. We had this big sort of triangle, sort of flaggy thing. We're broken that out. It's moved up here. It's just lacking the catalyst to move forward. And then, as you say, people sort of take profit. Then 12 o'clock last night, bang, it moves back on. There's no volume through Asia. That's the thing, because it's overnight for them. Sort of like, take your profit, go to bed, wake up. Oh, look at this. It's a bit cheaper than it was last night. Headline, bingo card, boom, and it moves up. That got sold into pretty quickly, but, again, it is really just more or less a bit of sort of drift down, sort of consolidation. But, they're the levels it needs to be to sort of say, to move on here. So, if your bingo card comes up and you start to see that move, well, okay, where it's maybe sort of targeting. But remember, anytime you see extended moves, particularly with oil, take profit. At least partials. Because inevitably something's going to come out. Remember the other day, this sell down here, Pakistan said that, they think the war's going to be over soon. What? What kind of garbage is that? Who cares what the hell Pakistan's got to say? They had some sort of defense pact with Saudi Arabia and Turkey or something. Watch out. Anyway, The point is that's just what will inevitably happen. You'll get some headline, market will act like it's the gospel, and then it'll get debunked. Look at how quickly it just got debunked. Boom, back up to the level, and then drift down here again. So look, I still think it's constructive to potentially go higher. Look, oil's one of those things. If you trade it, you really need to be, okay, that's what you trade. Because you've got these sort of crack levels, 3-2-1s, all this kind of stuff, which is basically sort of, the profit levels that sort of the refineries can make. And, these things are hitting record highs. I think diesel or something made, so don't quote me on these ones, but diesel made a record high with these things. So on one side of it, you've got profits and levels going through the roof. On the other side, you've got Pakistan coming out and saying they think the war's over and the market dumps whatever it does. A buck or two down here. But as I said, it's just bingo card when you're trading oil. And when your bingo card comes up and market goes, hey, and sort of shoots up, take your profit. Because certainly with the shorts, well, if you didn't take your profit, well, bang, you got stopped out. Well done. Thanks for playing. So, you know what I mean? It's headline stuff. It's not true trading kind of thing. You just need sort of wide stops and be prepared to stomach some volatility sort of going up and down with it all. All right, and finally, just have a look. I don't think we have retail sales, I think, tonight coming out. So these are, excuse me, where are we here? Retail sales coming out 10:30. Little bit of a tick down, little bit of a tick up, bit of a chop and change over here. I don't see this being necessarily the thing that's going to really rocket the market. It's another piece of the puzzle that you sort of pop in there. And that, look, in the US economy seems to be quite strong overall. Although they're sort of having, weaker, well, I guess in the scheme of things, weaker inflation or reduced inflation is a positive thing. Yeah, I mean, it just depends what you're trading in that, if you're trying to look for the stronger sort of thing. But I guess if you sort of step outside the idea of you're actually trading the dollar and looking for these things and strength in that and, all the markets that relate to that, well, it's probably a good thing. And I think the data isn't actually too bad. How does this sort of line up? I mean, it doesn't seem like a massive number, does it? No, that seems a little bit weak, actually, to be honest. So with retail sales and those kind of things, I mean, if people aren't spending, well, you got to think, why aren't they spending? Well, they're not spending because they're cautious or they don't have the money. So it's not necessarily a positive thing when you get weak retail figures. Is it going to be enough to shake the whole market? I think probably not. But, as I said, it's a piece of the puzzle that you pop in there, and the idea is that sort of weaker numbers there would require a bit more. It's a tick in the dovish camp, put it that way. Not necessarily that the Fed's turning dovish at the moment, because inflation is still 1.5 times, no, even higher, I think. No, one. Actually, what is it? 3.4, 3.5? Yeah. So I don't know. It's a better part of double, actually. 3 would be 1.5. Better part of double what their target is. So, weaker retail sales, I don't think are really going to change that. But it's just a piece of the puzzle that you pop in there. So it's just something to be aware of to sort of finish off the week. All right. One little last one here. Have a look at these ratios. Gold silver ratio, teasing, got the wedge, got the break. There's the breakout. Here's the back test. I've said this same level 3 times. Or last 3 days, pretty much. Anyway, you test it above here, slap back down. If this pushes through, that's your next leg down on metals. Gold oil ratio, teased up inside here, still price target. Price target's moved up. I did have it at 61%. It's moved up a little bit after that last little push up the top over here. Still, you need to get down underneath that sort of 38%. Should you get down underneath the 38%? If you move down like this, oil's going to be moving up and gold's going to be moving down anyway. So you don't need to wait to sort of have those things. That's just another level of confirmation. And when we get the confirmation, we go, okay, well, that's fine. When do we want to sort of jump off? When do we want to try and counter? Well, you look for price targets which come in around these sort of support areas over here. Has a bit of a gap underneath here. Well, the gap is technically down all the way down over here between the 61 and the 78. But I would say that certainly if this thing starts moving down like this, we're going to see a recovery in oil. That'll probably be about the time you see maybe a flag breakout if you get this sort of move underneath the lows here. And that'll probably see a little bit more profit taking in gold as well. All right, now that's it from me.